All right, everyone. First of all of you a very warm welcome to the channel, The Forgotten Money. Today we will discuss the week ahead macro events we're gonna have. But before doing that, before moving to the next week, it is always a good idea to go through what we had last week because it's kind of give you a direction on any pair or any currency that is it gonna go more hawkish or more dovish, or it's just gonna stay neutral for the next week or for the long term bias, because sometimes we have major events that can the pivot the central bank's point of view, being hawkish or dovish. With that being said, well, uh, last week, or let's say this week, was a really choppy week. Why was that? Because we had a month end, we had a quarter end, we had a corporate end. So with these three things, and also on the side of that, we were having elections from Europe side, and also we are having elections from Great Britain side, and there's also a debate going on in USA between the President Biden and the former President Donald Trump about who's gonna win. So with these kind of things going around or lurking around, it is really hard to get a trade on just on a good news, on a bad news, on the macro events. So with these kind of weeks, it really gets messy. You don't want to get in a trade, you don't understand the price action, just don't get into it. So there wasn't any trade that was held this week. However, I took one trade which I lost. Never mind, that's why we have risk calculators here that allow us to take minimum risk when we don't understand the price action, when we just trade on the basis of technicals. All right, so with all of that, let's go through some of the macro events we had from June 23rd to let's say Friday or Saturday, June 29th. It's the same thing, because we have some events that happens on weekends, like from China side we get non-manufacturing data on Sunday, and some events come on Saturday. However, the markets are closed on those days, but if we get deviation data on these holidays, we might, and there can be some volatility we can see as the markets get open following that day. So looking at June 23rd, Sunday, we had just look at this. Sunday, June 23rd, it's a Sunday, but we still had some macro events coming out on the holidays. New Zealand side, we had trade balance coming to 204 million, better than expected, with not aligning with the revised. Just went from 91 million to negative 3 million. So these yellow dots are the dots which has low impact expected. The market is not kind of focused on these kind of datas, because these are very less convincing to get them into the trade. So if you look at the yen side, we have Bank of Japan summary of opinions. It's just let me just open that for you. So it's a primary tool the Bank of Japan uses to communicate their economic and monetary projections to investors. The report include Bank of Japan's projection for inflation and economic growth, source first released in February 2016. They started doing it from 2016. However, this summary of economic projection wasn't something that I was looking to trade, and also the market wasn't, because this summary of opinion is a lagging indicator, and it does not give us any meeting minutes from the last meeting they had. It's just go back to back meeting. So this is not something. This is really a lagging indicator. Now moving to the Monday, uh, we had FOMC member Waller speaks, and let me just bring in the FOMC rate projections. I just have those here in my file. Okay, so on June 24th, so my tracker shows that we haven't had any major comments from Fed Waller. From Euro German IFO, business climate just came worse than expected. It has some medium impact expected, but it wasn't something that moved the market. We didn't had any monetary comments from Bank of Canada Governor Macklem on that day, so it wasn't anything that we were like kind of willing to trade, because he didn't commented anything on monetary policy. He didn't any commented on the inflation or anything on the growth or on the labor. So it was a kind of not to trade speak, so we didn't took any trade on that day. Now the next day, we had majorly from Canada, we had inflation reports coming out of Canada, and we had a beat. It was a huge beat. However, it just a common CPI came 2.4%, and with that, we, as I said, it was a really messy price action we had. So with that, even though the data came out much better than expected, we didn't saw any move. So it is really important in these kind of days that we understand that what matters to the market and what doesn't. It's just not like you think the data came in better than expected, you just jump in the market and think you're gonna get you a piece of pie and gonna move on to your next trade. It is very important to it is very important to understand that what is the overall bias we are having on that day or on that week, what exactly market is focusing on. So with that inflation, we do know that Bank of Canada lowered their interest rate on their last meeting, and they really went dovish. They were really went dovish, and Bank of Canada Governor Macklem said it's reasonable to expect more rate cuts if inflation continues to ease. However, we are seeing the inflation is started ticking back from 2.8% to 2.9%, which is better than expected, and also showing let me just put that timely. Okay, we are out of connection here. Come on, down this to me. Okay, it's loading here. Okay, I guess I have to refresh this page. There we go. So if you look at the inflation, it's just got stickier here. The Bank of Canada cut their rate on the basis that inflation is really heading sustainably to the downward, which they were right, they weren't wrong, and they cut the interest rate about 25 basis points, and just after that we start seeing the inflation got getting stickier, and it is not moving downward from this print, but we don't know what's going to happen next. We will see when we get the next inflation roll. But however, with this report, we are seeing that it's just got stickier here, 2.9%. And with the bank being so dovish, just realizing that the labor is strong and the inflation is heading down, we should start cutting the rates. Might can lead to push to the increase in the inflation, and the bank might not become as dovish as they were in their last meeting. So with that being said, let me just close this up. So on the dollar side, we had manufacturing index, and I think I have said that before, and I'm gonna say it now, that I don't like trading a manufacturing index because these are not, I think, the reliable. They just show so much deviation in the data every time we get it, and that's the reason I really don't like trading it, and it also don't give an edge. Conference board consumer confidence came a little bit in a positive territory at 100.4, and got revised from 102 to 101.3. So after that, we had Aussie CPI. All right. So on the last meeting, the the Reserve Bank of Australia, they kept their rate unchanged at 4.3%, and they went really hawkish. They said that they are not ruling anything in or out, and if the inflation does not come back that they expected, and if it remains high, they might can increase their interest rates in order to put up pressure on inflation to get back to their target level at 2%. All right, and if I look at the statement we had from the last meeting, if just we look at the inflation statement, they said returning inflation to target within a reasonable time frame remains the highest priority, and inflation is easing but has been doing so more slowly than previously expected, and it remains high. So from their comments, it's perfectly fitted into that the inflation is seriously not getting down, and it's just being steady or sticky, or even showing some reverse sign rather than going to their target at 2%. It's just started heading back to 4%. Now they might be thinking that they have to keep the rates there where those are right now, and the RBA Bullock governor, she also said we did not consider the case of a rate cut today, and we need a lot to go our way to bring inflation back to the range, from the comments we had from the presser from the last meeting. So the bank was really hawkish, and with this data, it can get expected that they might hold, or let's say increase the interest rate before the end of this year. Now, moving to the Wednesday on June 26th, we haven't had much from the economic event side with just this high impact news, due home sales. It's just was a mixed bag across the board. We didn't took any trade on that day, and we haven't had any speaker. Moving to Thursday, June 27th, we haven't had any comments from Bank of England Governor Bailey. However, I was really looking forward this peak, because from the last meeting, the Bank of England just kept their interest rate unchanged, and we haven't had any any pressure after that. And this was the first speak we were supposed to get from a governor Bailey, but we didn't get it. So it was just disappointing that that didn't happen. So, with that being said, moving to the US dollar, we had a final GDP. It's not something, it's really not market moving. If we open the GDP section, we can see that there are three parts of GDP. We have advance, that's the more market moving. Then we had preliminary, medium, and then we are final, that is really don't move the markets anymore. So this was the data we are getting at the end of this quarter, and this is the final GDP, and it just came as expected. However, it wasn't market moving anymore, any of the reason. Unemployment claims just came as expected. 230K was stayed in a healthy territory, and the reasons weren't that significant. Durable goods, some sort of a mixed bag, or let's just say as expected. So overall, it was a nothing burger. We didn't took any trade on this day, and it's just another day getting bored, not taking any trades on Thursday. On the last day of the week, Friday, on the last day of trade of the week, the last day of the trading on Friday. If we start and look at some major events, we had a French preliminary CPI came just as expected, 0.1%, and we had GDP month of month as expected. Like, it was so messy, it was so choppy that we didn't understood the price action. It was so choppy, and that was the reason we didn't took any trade. And with the corporate month and quarter end, it was a disaster. If we could have been got into the trade, it could have been disaster. Well, so with that, Saturday we had a manufacturing PMIs from China staying where it was from its prior, and services PMI just staying in expansionary territory, but it just came down from 51.1 to 50.5. So that was the week, guys, we had, and it wasn't, as I said, much of the tradable week, and we just didn't took any trade on that day, on this week. Now let's look at the next week, what we have on the table. Okay, let's talk about the election. So first thing first, we are having two elections. First election we are having from the French Euro side, and the results coming at the early Monday and getting released at 15 Eastern time. And we are also having on Thursday we are having a parliamentary elections from Britain side, and we also having a holiday. It's first of it's a holiday on June 4th from US side, and okay. So if we look at the French elections, let me bring in the polls. So if we look at the polls, currently RN party is leading the pack with the 35% majority, NFP 28%, and the governor and the Macron's party at currently sitting at 20%. So it looked like the outcome will be another hung parliament, which may see a slight narrowing of the OAT bond yield spreads. And the most recent polls have the first time pointed to the possibility of an RN majority, and it calculates that they could end up with 262 between 295 seats, potentially inching above the 289 majority mark. So, with Aaron's Bardella as PM under a Macron presidency, and would likely spark a deterioration in French assets and further widening of bonds or ORT spreads. So the results we will get on Monday, and after that it will be interesting to see what how the market takes the results, and which way it goes. Now, with the French parliamentary elections, we are also having from one side manufacturing, non-manufacturing index, and currently it's just sitting 11 with no change. Market expecting a little bit down in services index 33 from 34, and also having a final manufacturing PMI just with the no change. And from China, we are having I think it's just a kind of no change manufacturing PMIs. The main event we can have is a German preliminary CPI month of month, just expected to rise by 0.1%. So I don't know what time they're gonna get release it. However, I'm gonna be sleeping might on that time, because it's just gonna get released between 3 or 3:30 a.m. And we are having manufacturing all across the Europe, and we're also having manufacturing from Great Britain side. These manufacturing are not that important, because these are the developed nations, and the manufacturing doesn't contribute much in the GDP, and mostly the services way more than manufacturing in overall GDP growth. So we're also having a holiday in Canada, but as I said, Canada is not a big participator in forex exchange, and just I will ignore it that we are having a holiday on Monday, and I will definitely will try to trade ISM manufacturing PMI and manufacturing prices. These are some this is not the premium calendar, so it's just a free, and we don't get much of data from free calendars. So if you want, you can find out and can get premium calendars which show you much more data than just these two. So ISM manufacturing PMI is expected to rise a little bit, but still it's gonna stay in a contractionary territory. So if you look at above 50 indicates expansion, below indicates contraction. So below 50 is still below 50, but it's just market expecting that little bit recovery from being that contraction to this one. We are also having ECB President Lagarde. She's really smart and chooses word very wisely, and if she give us some sort of a hint that is there gonna be more rate cuts, or they just gonna hold their interest rate, This will something we will look for on Monday, and we are having monetary policy minutes from Australia. And as I said in the starting of this video, that we the bank left their cash rate unchanged, and they went a bit hawkish with their governor. And we also had inflation coming better than expected quarter of quarter. And with that, it will be interesting that what we're gonna have in the meeting. So which member voted for hike, or which member said we need to still hold the rates. So core CPI we are getting from Europe. CPI something to keep an eye on. Again, we're gonna have at 10:30 Atlantic Standard Time. We're gonna have ECB President Lagarde speaking, and this is a important Fed Chair Powell speaking. I think he's speaking after a while. I haven't seen him speaking from past week. We haven't had any speak from him. Maybe from the last week to last week too. But this is something to keep an eye on. 11 we are having a Joel's job, and 10:30 p.m. retail sales from Australia, and building approvals from Australia. Just it's just something that I'm looking to trade on. It's just have a low impact. Wednesday, services PMI from all over the Europe, and from the Great Britain pound. It's going to be a final PMIs, and we also having a FOMC member Williams speaking on Wednesday. The Governor Martin speaking from France. The major events we're gonna have is this ISM services PMI, and before that we're having unemployment claims and ADP. However, it depends which way we're gonna trade ISM services. It's totally depend on this two data, which way we're gonna get it. And after that we are having ECB President Lagarde speaking, and then majorly we are having FOMC meeting minutes. This is something to have a look on. On Thursday, we are having inflation reports coming out from Frank, and if we look at the last meeting, the central bank cut their rates by 25 basis points, and they also lowered their projections on inflation, on their cash rate, on their growth. And this is something that we must pay attention to. Even though we are having a holiday, there isn't going to be much of the volatility we might see in the market, but it's worth keeping eye on. We are also having parliamentary elections from Britain, and if we look at the polls, so currently Labour Party is leading with 41%, and the other parties is staying. Second one is staying at 20%. The Liberals saying 12%. So this is something we should keep an eye on. On last trading day, we're having a labor data from US side and from Canada side. Average earning, NFP. It's an NFP day, unemployment rate. The market is currently expecting no change. It's just showing that 4% a priori we had, and the forecast is also the same 4%. So the labor market it says stated that gonna show some downbeat. Market is expecting, and with the average earning gonna get decreased by 0.1%. This is something major we will see on Friday, and this is the week we can get some volatility, and we will see. We will hope we will get some good trades this week. And with that said, if you have any questions, don't hesitate to let me know. So it's just a macro event analysis, and this is not technical. However, I'm trying to put together everything so that I can start doing a fundamental and technical analysis from this week, from maybe from the next week. I don't have any date in my mind. However, I'm trying my best to get time to do those analysis too. So with that said, thank you very much for reaching at the end of this video. I hope you enjoyed it, and if you have any questions, just comment down in the comment section, and I will try to reply with the knowledge I have. Thank you so much.